Generally, there's really just two types of longs. Actually, three types, but the third type is just an engulf pattern, which is really easy to trade. But there's compression breaks, which are pretty straightforward, and then there are like the first breakout or the first continuation back up after a D1 pullback. You can do that on stocks that have moved really far, that have ripped, or if you're really fancy, you can do it on stocks that are in like a bigger time frame channel. You can do it on something like coin, right? So this is a big channel right through here, and there's the pullback through there, and then you wait for the breakout above. But here's the easiest way technically, like TA wise, to set it up. So let's go back to APP. So you're just going to take an anchored VWAP and you're going to find where today it's at the highest point. And that's on this day. I don't exactly know why, but I've seen like this happen 100 times. And so I just do it. So, and then I'll just set an alert for a break over there. So alert for the break. That's the level right there. Sometimes if you use TC2000, it doesn't always necessarily line up on the 5-minute on the D1, but it doesn't really matter. And you'll find, interestingly enough, that it's usually kind of like halfway on that big bearish candle. Like that's the sell day, right? So if you're breaking out through here, you have engulfed this halfway, which is usually like a telltale sign that this thing might not be able to hold that selling. You know, that selling might have been overcome. Now, how do you tell that it's not just going to boop, wick, and then wick out, and then pull back even further? Like, how do you know it's not going to do this, then there, and like either fall apart or come back, but then, you know, your trade's dead because your stop was there or because you have no more theta or whatever. Intraday, you're going to take previous days, any previous day that's on the same side of the D1 8 EMA. So this right here is actually the 10. So let's switch over to here. Okay, this blue line is the D1 8 EMA. The other one was a 10 SMA. So anything that's on the same side of it. Now, right now, this one doesn't really have anything, but it might, you know, chop around a little bit in there and then go. And then you're going to take, you know, the anchored VWAPs of the previous days that are on the same side of the D1 8 EMA as you. And intraday, you want to see them all tested sequentially, like step, 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 all the way up. You don't want to see them go straight through and then continue, because if they're still on the same side of the D1 8 EMA, like let's say the 8 EMA is right there, they have to go back and test it. There's something about these bid programs or these buy programs that make sure that all the liquidity is swept up and they use anchored VWAPs. That's what I'm using to minimize the amount of fake breakouts. And it works really, really well. As long as all the bid below it from the anchored VWAPs is confirmed, once in a while, I will take anything that's like a really high volume D1 candle and I'll put like a horizontal line there on the highs and lows of those high volume D1 candles, like you see what I just did there. And intraday, you might have to confirm those as well, but you'll also find too that the anchored VWAPs kind of line up with them anyways. But typically those are all like the points of high liquidity that the buy program is needing to retest, or whoever's filling the bid order. As soon as all of that is confirmed that there's a bid off it, sequentially in a stair-step pattern, like 1, 2, 3, in order. It can't randomly get them all. 1, 2, 3 in order, and then breaks out, the next thing you're going to look for is you're going to look for a hold of the range high of that breakout. So let's say the price confirms all the bid below there off the anchored VWAPs, breaks through that big D1 point through there. Now you're looking for this to hold. And the easiest way to do that is just to wait for the 8 EMA on the 5-minute chart to catch up to it. It might compress and then go more, or it might pull back, bounce, and come back up to it, but you have to break the opening range high of that move. Okay? Then you can enter. Now you might lose your mind because it just keeps going and going and going and going and going and going like that. But you're going to pick charts that have really good upside to them anyways, so it doesn't really matter. It only matters if you're using shares and this thing is just going and going and going and going and going and going and going, and it exceeds the ADR of the stock. If it exceeds the ADR of the stock, you probably need to have your stop way too far away, which would be like the low of that day. But if you're using options, who gives a shit? Wait for the opening range high to hold. Okay? Then you can enter, and then your next target is like at least the high, but usually a little bit higher up. Interestingly enough, this TA probably lines up with a lot of different TA methods or different trading methods. This is the gamma chart on APP, and look, there's a large amount of calls or a call wall hanging out right through here at 350. And look where 350 is on the chart. That's kind of convenient, isn't it? You'll find that this stuff lines up perfectly. Now, if you see a lot of puts on there, a little sketchy. Ideally, you want to take a chart that's pretty much all calls all the way up. And you want to aim for the next big chunk call. So for me, if I confirm the breakout using that intraday price action, my target would be 400. Which means that I might not take that trade because it might be here when I enter. And then I only have like that much room to make, which is like 30 bucks, but proportionally speaking, not that great. Now, if I can take a CDS, a call debit spread that is out of the money from where I am, but still would be in the money if I hit my price target, then that's great. Usually, if you can get a spread that's inside the price target, between the price target and your current price, and you have a confirmed breakout, you can usually make a lot on those too. And in fact, you can make them like 30, 40 days out, and they can still pay quite nicely. You just have to check to see if it's possible. Use this website, OptionStrat, and just throw in all of the. You're just gonna want to throw in pretty much all of the, like the different combos, like the different expiries you could use, the different strike combos, whatever, and just see like what can give you the biggest payout to target. That's what I've been doing. Works really well. I look for something that can pay me close to 100% so that I can just slam in the position and just walk away and not give a shit about it. And I try to put enough time on it so that if for some reason I do get a pullback in the market or the breakout doesn't work, it goes back down and then it comes back up. There's enough time on it. Like I would make it out to, right now I'm taking January 24th contracts at the earliest. If something's really kick-ass, I might go like, I don't know, like 3-4 weeks. But I'm not taking like a 2-weeker or like even a 3-weeker. A lot of mine are like January 31st, which means that I can hit my target, or if it goes to here and F's around a little bit and comes back up, I can still hit my target. And the beautiful thing about a CDS or call debit spread is that the longer it takes to hit the target, the more that you profit actually from it, because the short strike kind of decays, but you're still intrinsic. You can use shares on some stuff, but only if the market's really kick-ass. Right now, the market is not really kick-ass at all. But there's my long-ass video about how to confirm these types of breakouts. So you're looking for stocks that have had really big run-ups and then now are pulling back and then kind of tightening up and compressing a little bit and forming a little bit of higher lows. And then you'd use that technique that I just said to confirm the breakout, and then make sure that you have a decent target for them too, that they're actually worth taking.